It's Monday morning in the garage, January 26th, and the market is acting calm, but the warning lights are back on. Bitcoin is sitting around 87,000. Ethereum is hovering near 3,000, and Solana is holding the mid 120s. On the surface, that looks stable. Under the hood, it's tense. Here's why. The US government shutdown risk is officially back on the table. It's no longer a hypothetical. Funding deadlines are approaching, negotiations are noisy again, and markets are still pricing this as unlikely. That's dangerous. Shutdown risk doesn't move slowly. It reprices confidence intraday when probabilities shift. When Washington wobbles, liquidity tightens first and prices react second. Now stack that on top of Fed week. The Federal Reserve meets Wednesday, January 28th. Rates are expected to stay unchanged, but the decision isn't the event, the tone is. This is a classic hawkish hold setup. If Powell leans firm on inflation or balance sheet discipline, risk assets don't negotiate, they adjust. If he opens the door even slightly to easing later this year, you'll see a fast squeeze in anything leaning short. That's the fulcrum. And while the market debates that, capital's already making quiet moves. Michael Saylor's strategy just bought nearly 3,000 Bitcoin, a $200+ million allocation dropped into the market while price is heavy. That's not momentum chasing, that's positioning. At the same time, Binance launched Tesla futures trading, expanding derivatives exposure while volatility is still being underpriced. That combination usually means positioning is building, not unwinding. Now look at the hedge side of the board. Silver just printed a new all-time high at 110 and gold pushed to 5,105. Those aren't speculative moves. That's protection demand. If everything was truly risk on, metals wouldn't be screaming like this. Bitcoin holding 87 is critical. It's the hinge. Hold it, and the market can breathe. Lose it, and this turns from consolidation into liquidation fast. Especially with ETF flows already stressed, Ethereum is cautious, moving like it's waiting on rates. Solana is stronger on rotation and usage, but no asset outruns a full liquidity event alone. This week looks light on the calendar, and that's exactly why it's dangerous. Thin schedules plus heavy positioning create air pockets. So watch Wednesday, watch shutdown headlines, watch gold and the dollar, and watch Bitcoin at that 87 zone like it's the last bolt holding the lift. The garage is quiet right now. That's usually when things move. Engines hot, safety off, let it rip.